All right, guys, bang, bang. I've got Patrick here with me. Thank you so much for doing this, man.
Thanks for having me on.
Absolutely. Let's just jump right into CityCoins. I think this is kind of a fascinating idea that you've been working on. What exactly is a city coin?
Yeah, city coins allow you to put a city into your portfolio. So when you support a city by buying its city coin or mining its city coin, you're directly contributing to essentially some yield that the city themselves is earning. So what city coins can do is a few functions. So you can program city coins, so like developers can use them. You can mine them, and then you can stack them. So the process of mining a city coin is the process of sending a base currency into the CityCoin smart contract for that specific city and competing to mint new city coins. Now, the base currency that's being forwarded into it gets diverted to two areas. 30% of it goes directly to a reserved wallet that a city can claim custody of, and 70% of it goes directly to everyone else that is locking up their city coins via this concept called stacking. And so that's the basic gist. And we think that this is going to create a completely new dynamic between government officials and the markets.
Got it. And so right now, when you think about kind of the technical architecture of this, you guys are using the Bitcoin blockchain for security and kind of merge mining stuff in, or how exactly does it work leveraging the Bitcoin blockchain?
Yeah, so we're actually just sort of generalizing what the Stacks blockchain is already doing by recycling Bitcoin as kind of like a crystallized proof of work and forwarding that into the Stacks blockchain to secure the Stacks blockchain. So what I described with how you mine city coins, you do the same thing with the Stacks blockchain as well. So people compete to get new stacks by forwarding Bitcoin, and that secures the network. So it's like a race essentially to see who can forward the most, and your chances of winning is sort of weighted based on how much you've contributed. So it's pretty green. Like you don't have to create your own proof of work, and you don't have to rely on something that we believe is less secure, which is proof of stake. And so essentially what we're doing there is we're saying, okay, if this works for the Stacks blockchain, well, it can work for chains above the Stacks blockchain. In this case, the whole CityCoin ecosystem. So what we're doing is we're actually using Stacks as the base currency to forward into the CityCoins smart contract to mint new city coins, just like Stacks requires Bitcoin to mint new stacks.
Got it. And so let's just fast forward 25 years, right? And kind of go to the ultra bull case for this. It works. And let's pick a specific city anywhere in the world that ends up doing this. Who is kind of the customer or the users when you think of this? Do you think of the government, the local government as the customer? Do you think of citizens in that local ecosystem as the customer? Is there investors? Like, just walk me through first kind of structurally how you think about who this is serving, and then we can kind of talk about what that would look like if it works.
Yeah, sure. So just to sort of take a step back, I think every startup city is going to have its own city coin. It's almost like every company has its own cap table, and that's how you organize people to, do work and success of the company's mission. I think that's going to happen with cities, and you can imagine like cities like Bangalore, India, Miami, Florida, New York City, Dubai, Singapore, all having their own city coins, and even small cities like maybe even Bitcoin Beach, right, can have its own city coin like $ Beach, and I think. What's going like essentially there are two and potentially three customers. So the first customer is the city government, and I'll walk through kind of like why they're a customer. So the city government is given this sacrosanct reserved wallet that they can claim and no one else but them can claim. And the economics are such that if the market cap for that city's coin is at like $1 billion, that city is earning like $50 million per year. That's enough to like wipe out municipal debt servicing. That's enough to recruit new crypto startups into their sort of municipality. And I think what's going to happen is you're going to see this sort of archetype of CEO of the city emerging, for which a mayor like Mayor Suarez is really kind of one of the first. And so what they're going to do, I believe that the best sort of cities will operate like startups. Essentially, they'll use their funds to recruit new founders. They'll who could also add more utility to their own CityCoin, who can build apps around it, or just apps generally in the crypto space that that exist, and they get tax revenue. But you can imagine also a world where like these CityCoins become even more valuable than $1 billion. Like let's say a CityCoin becomes worth $10 billion. Well, then you're getting into a territory where for many cities, you would not necessarily need to tax your own residents because your income is actually eclipsed what the sort of the tax budget and burden is on a yearly basis. So that's like a complete inversion from what we're used to, which is like, government creation of debt, tax, spend, all that. This is like a much more positive sum sort of thing. So that's like the model of startup city as a startup. Now, the other side of the sort of equation is the stakeholders. So you can have people who live in the city, people who live out of the city, who are hodlers, or just traders providing liquidity. But the reality is there is now a market relationship with the city that the users can have. So initially your ways of voting. So I'll give a few examples of how they benefit. So originally your ways of voting were vote with your ballot, in which case like half the time you're pretty pissed at who gets elected, and then even if your person does get elected, they don't always do everything you want them to do to benefit your city. And then the other way is voting with their feet. And very few people can actually vote with their feet, but we proved that it's very possible in 2020 with remote working, et cetera. Almost all my friends have like moved from whatever, San Francisco or New York to Miami or to some other city. And they're essentially that's the exit, and the voice is ballot, right? Now, this third option of voting with your coin, I think is really, really useful. Because there will be hundreds, if not thousands of CityCoins in the future, you're going to be able to move your assets from jurisdiction to jurisdiction and essentially have capital flight at the speed of light. Now, that's a lot easier than waiting 4 years, 2 years to vote in with the ballot. It's a lot easier than uprooting your family, moving to another place. Not all cities are created equal. So like, some people are willing to, take a hit for the schools and maybe the tax burden isn't so much and they like the weather or whatever, so they stay put. But they should have the ability to sort of win and help win in the cities that match sort of their ideology, right? Because if you're a token holder, you're earning yield as a function of merely holding and locking your coins. Now, that's like a purely financial and sort of voting aspect of CityCoins. You're also going to be able to sort of develop with CityCoins too. So you can imagine like proof of hodl, access control to digital and physical applications and locations. You can imagine, so you can imagine people betting, voting, essentially voting on what they think is going to happen in the future. You can have people actually voting themselves, within their actual CityCoin group. You can imagine atomic swaps and transferring in and out of different cities' coins, and using decentralized exchanges, and just programming applications that require usage of that city's CityCoin. And so I think is interesting. Yeah, go ahead.
And so when you think through that, right? It sounds like the city, there's a way to basically change the economics of a city, and to use kind of new technology to do that. It also seems like maybe there's another side of this that is almost like you could bet on a city early, or you could bet on the safety of a city staying relevant, and maybe even in some crazy way, like you could like short a city, which is like a little weird, but potentially possible. And so is it fair to say that really it's the city, and the city is a proxy for the local citizens because the city's going to use that revenue to kind of make the city better, is kind of one type of customer. And then the second type of customer is individual investors or organizations that are investors. And that could be local citizens or other people around the world. Got it. Okay. And so let's talk through if I'm sitting in that government seat, right? So, let's use Miami as an example. Right now, you guys have Miami Coin. What is the evaluation that the mayor of Miami, a governor of the state, et cetera, would make in terms of what their options are? So what are the things that they could do? And then why would they do certain actions versus other actions?
Yes, I think the primary decision that these municipalities need to make initially is whether they're going to claim their reserved wallet. Now, mining CityCoins and the reserved mining CityCoins can happen prior to that, and therefore their reserved wallet will be credited money ongoingly, like 24/7. And essentially, what happens is that bag gets so big, it becomes a fiduciary duty for the city to pick it up, right? So if you have $10 million just sitting on the sidelines and you're not doing anything, your citizens are going to get pretty pissed that you're not using it to, fix homelessness or, recruit more crypto startups or, beautify the city, or do whatever you want to do with it. The fact remains, most cities actually have budgets that are like right at the cusp of what they can tax, and this provides an additional revenue source for cities that was previously not there before. So instead of the zero sum tax and spend sort of methodology, this is a much more positive sum sort of way for cities to benefit from people supporting the city.
And are they able to take, let's say there's $10 million sitting there in that wallet, they claim the wallet, can they actually go sell the tokens to get the cash or whatever asset that they want?
Yeah, they can do they can do with it whatever they want. So they can so they're going to be earning stacks. And if they want to buy back their own coin, their own CityCoin, which I think is like a very healthy thing to do, they can buy back their own coin, and they can just do that if they want to. They can liquidate into USD and just say, hey, we want to keep crypto on our balance sheet, but we're willing to like liquidate into USD ongoingly, and we'll use this budget for something the city controller can decide. Or they can say, hey, this is a great opportunity for more transparency. We'd like to show you where we're sending this money to, so you can actually track the payments on the blockchain. And I think increasingly what you're going to see are mayors operating in public and financial controllers operating in public and having feedback with the community, and sort of like showing where the money is going, and sort of optimizing for people being bullish on the city. Like you were saying before, you can effectively short a city or go long a city. Like San Francisco is a city that I think, unfortunately, is like kind of being run into the ground in some ways. And San Francisco is a great city, but it's a city that could be doing a lot better. And so you could bet on the turnaround. Maybe San Francisco is trading on 10 cents on the dollar, based on what you think it's going to do in the future. You think they're going to get their act together. Whereas maybe Miami Coin, you think is just going to continue booming as long as Suarez is sort of mayor. And there might become a time when it's overvalued, and you want to move into another city, like Bitcoin Beach or something, or Singapore or Dubai or whatever. But
why is this the right time for this now, right? One of the key parts of technology kind of taking hold and gaining adoption is just the right timing of a market. Why do you think now is the right time?
Yeah, so I think that, there's like a huge 30,000 foot view on this, and then there's like the 10-year view. I think if you look at like the United States, I think when you talk to most people, you say, hey, I think the US is kind of like a descending country. It's no longer on the ascent, which is like an unfortunate conversation to have, of course, but most people will agree with you. They'll say, yeah, that's like a fact. That's true. Like essentially we're like sunsetting in a way. And I see like just within the United States, there's an opportunity for city states to actually become more important than like the sort of top the whole nation. And in part, I think CityCoins represent a way to almost like buoy countries like the US that might be on the descent, and accelerate cities that essentially want to modernize. You're already seeing like the playbook from El Salvador and Paraguay and South America, which is, by the way, on like the same longitude lines as the US. I think it's like they're a great release valve. But you're already seeing the playbook there, where essentially they plug into like the Bitcoin standard, and they essentially try to modernize their country through attracting like technologists and crypto capitalists. And some say like, okay, they have nothing left to lose, so why don't they do it? I think they're actually just like the first raindrops of a huge geopolitical movement that's going to happen, and that is essentially going to be where many cities and even countries sort of move over to the crypto axis of sort of capital, as opposed to the sort of fiat like USD or yuan or whatever. So I think this is just like an opportunity for opportunistic cities. I think they're going to benefit tremendously from this, and the ones that move fastest might be not the ones that you'd expect, but the ones who are sort of most opportunistic.
You could have literally gone and worked with anyone, right? Everyone from New York City to an El Salvador, Bitcoin Beach, to Tijuana, to somewhere in Asia. But you chose Miami. Why Miami over kind of all the other places you could have gone first?
Well, one thing is Miami is incredibly technologically progressive. Like, let's just like call it what it is. You have Florida with low taxes. You have Francis Suarez and the rest of the gang in Miami, essentially rooting people on to move to Miami, embracing essentially technology and capitalism and all that. It's a very diverse city. It's not just it's not a super homogenous city. There's a lot of heterogeneity, and the culture is a vibrant one. It's not a boring town, that's for sure. And it's sort of like a gateway to South America too. I think that's really important. And then the thing that one of the things that kind of tipped it for me was like San Francisco was kind of this foil for Miami to grow. In terms of like two poles on an ideology, San Francisco essentially got infected with like an exotoxic meme, and their entire city is sort of their entire city is on a mission to validate their ideology that is like incongruent with reality. Whereas like Mayor Suarez, love him or hate him, I'm very pro Suarez. But love him or hate him, he's actually capturing all these new customers. And customers, I mean, like new citizens and new people visiting the city. And he's doing that by using SF as a foil. And like, what's crazy to me is it's not even clear that SF even like realizes they're in a huge issue. They're in a really bad place. Like, I think they're actually, I think they still think that everything's just going to be fine for them when it's not actually totally clear that is going to be the case. So SF being a good foil for Miami honestly did impact some of this. And I think when you have a mayor that's like willing to talk to you on Twitter, it's like how can you not want to reward that person for the work that he's doing? Like essentially when you say you're pro technology and you're pro technologist and you're going to have a safe place for freedom to innovate, you're not going to cast these people out. Well, the people that you're welcoming in are going to reward you very much. Like they want to help you. And tech is like an incredibly helpful culture. Like, there's a lot of journalists that like to write bad things about technologists, and no one is morally 100% pure. Like no one's a Puritan, but technology, I worked in much of it at different industries, and like technology has been the most like positive sum, helpful sort of culture I've ever been in. And I think Suarez knows this, and Suarez stands to benefit from it. So we want to help them out. And if they help out this movement, they're going to be unlocking the door to a massive movement that is like already well underway.
One of the ideas that you've shared with me before that I think is fascinating is this idea of municipal equity versus municipal debt. Maybe elaborate on that a little bit and just kind of explain what those two things are and the differences and kind of, how people can kind of capitalize on this framework.
Yeah. So, so a lot of people are familiar with municipal debt, where a government will, like city government will, create, like 800 million or $1 billion worth of debt, and then they'll sell it for low interest rate, and then their taxpayers have to pay it back, right? So there's very antagonistic relationship between their ability to effectively print money that they can spend that later has to be raked, or has to be taken out of the hands of their citizens. And one of the issues is the citizens don't even own that debt. They're not benefiting from the interest rate there. Like how many Miamians own Miami muni bonds? Like very few. It's mostly institutions and sovereigns or whatever. And when there's good money to be made, it's and there's large spreads, it's usually because, or it can be because a city is about to go BK and go bankrupt. So that's not like the sort of positive sum situation that a concept like municipal equity conceptually would be. So municipal equity is something where all stakeholders have a stake in success of the city. So you can imagine if you had NYC coin and there's a lot of people in New York City that want to hold that coin because it's bearing a very healthy interest rate, and the success of that city means that not only does their interest rate go up sort of commensurately to the market cap, but also their holdings go up, and the city benefits from it as well. So I think a lot of people feel detached from their city in terms of ways they can help, and this is one way where they can win with the city and help the city win as well. Similar to how people have ownership in a company. This is like a sort of company-fying the idea of cities.
Is it fair to think of maybe debt being kind of an old model for the way that a city would work, and equity with new technology actually being the way that cities in the future will be financed? Or do you think it's kind of a coexistence where they'll both be leveraged for different things?
I think it'd be a coexistence, just like you have, cities that have, you have companies that have corporate debt and all that. I think it'll coexist, but not all debt is bad, obviously, but you can get in trouble with debt, and you get in real trouble when you realize that the old paradigm that people were living under before, which was one of immobility, where people didn't really move from city to city very often, is completely out the window now. 2020, you really blew the lid off of that being the reality, right? New York City, they have some extremely small amount of people paying all the taxes in New York City. It's that 1% leaving New York City decimates New York City. So they can't even afford to have those people leave, right? So you can get into some pretty precarious situations if they're taking out too much debt, or their budgets are too high. And I think this is just one more tool for the governments. It's also kind of like a Trojan horse too. These governments are essentially all going to be getting Bitcoin, because when you earn stacks, you also earn Bitcoin. It's like a dual yielding asset. You have they earn stacks and they can lock those and earn more Bitcoin, and same with the CityCoin holders. So, it's when you think about how people approach trying to cryptoify cities, they're let's try to get crypto to be adopted for, payments in stores. It's maybe not, maybe actually, cap tables are pretty valuable, and they might be most valuable data structure that exists. And, cities can actually use cap tables as a tool to sort of essentially get more revenue and have the ability for people to interface with their government on on a more like real time basis as opposed to every 4 years. Um, so yeah, hoping this is like a very positive Trojan horse.
Hey guys, what's going on? Before we continue with this awesome episode, I want to quickly talk about our sponsor, Kraken. For the last 10 years, Kraken has built one of the best platforms to buy and sell cryptocurrencies online. They've got a brand new mobile app, the Kraken app. Today, you can go on and buy Bitcoin or up to 60 of the most popular cryptocurrencies in the world. And you can do that on the go 24/7. All you have to do is simply download the app, connect your bank account, and you can get started investing with as little as $10. It only takes a minute to get started. With the new Kraken app, you'll have your portfolio in your pocket. You can track your portfolio, see who the winners and losers are every day, track your favorite project, or just simply look at the trading volume for your favorite assets. It has all the features you need without any of the complexity. It's simply the best place to buy and sell cryptocurrencies. So go to kraken.com/bangbang to learn more, or go to your favorite app store and simply search the word Kraken and you can download the mobile app there. Kraken's been a longtime supporter of this show, so to say thanks, it would mean the world to me if you would go and download their new mobile app. All right, let's get back into this episode. I hope you're enjoying this one.
Yeah, when you think about kind of the structure that you're leveraging here, some people will say, "Hey, why don't you just use Bitcoin? Right? Why do you need to leverage stacks or kind of the Miami coin or CityCoin structure?" Walk through maybe the pros and cons of doing something like this with just Bitcoin versus kind of leveraging the security of the Bitcoin blockchain and then doing it kind of on this this side chain or kind of a layer 2 type approach.
Yeah. To be sure, we are anchoring into Bitcoin. And so Bitcoin becomes more valuable as a function of more usage of things like CityCoins that creates more demand for block space on Bitcoin. So that's like, check the box there. But in terms of, why don't you just try to get Bitcoin integrated into every city? Every city's got its own ideology. You can view them like companies. Like you wouldn't put 500 companies in the same cap table because they're all different companies. And they have they have their own employees that have a stake in the success of those companies and those various missions. So you could have take like a city like SF and a city like Miami. You think those cities want to be on the same cap table? Hell no. Like those cities want to be on their own cap table and they want to live or die based on how well the markets appreciate their sort of ideology and how they operate. Now, Bitcoin is actually very useful in terms of like a substrate. So you can view Bitcoin like Unix or Linux rather. Like you have big companies that plug into Linux because they know that the others can't really mess with it. It's like a digital no man's land. I think Bitcoin really is that, right? So like, I think it's good to like view Bitcoin as like the sort of digital no man's land where all these different cities can plug into, and they know that the substrate's not going to change. It's like a low entropy carrier, and the cities are just represented with their own cap tables. So people have some. They can essentially like trade. They can trade these cities based on what's going on, and you wouldn't be able to do that if it was all on the same quote unquote cap table, which would be Bitcoin. That would be like, kind of like diffusing the whole thing.
There's this mining aspect, obviously, to Bitcoin, but there's also a mining aspect to the CityCoins. Maybe describe kind of what that means when you say mining with these CityCoins, and how does that work? Who benefits?
Yeah. So with Bitcoin, you mine with compute and electricity, and that proof of work is incredibly costly, but it's incredibly secure. And we don't really see a reason to replicate proof of work over again. Like Bitcoin is good. And so what we think should happen is just recycling that proof of work. So what we do is we take Bitcoins that sort of crystallize robot sweat and throw it into another consensus mechanism, which is called proof of transfer. So this already happens, as I mentioned earlier, from Bitcoin into the Stacks blockchain. So Stacks is secured by Bitcoin, and then we take the fuel, which is the Stacks token, to then secure new blockchains and new and to mint tokens on new smart contracts. So we're essentially generalizing that proof of transfer, where people have to like the Stacks, they have to transfer Bitcoin in order to in order to mine new stacks, and then they have to the holders of the stacks tokens who temporarily lock them have that Bitcoin that was sent via mining transferred to them. And so so then, as I mentioned earlier, we take that stacks, use it to essentially compete to mine new CityCoins. So you could have over 100 people or 100 miners sending stacks into the CityCoin smart contract for Miami Coin, and who wins that is pseudo random. It's kind of random, but it's weighted based on the amount that's been put in. So if you put in like 90% of all the sort of money that's going into that specific block, you have a 90% chance of winning the block reward at the end of those 10 minutes. So.
And when you think about this, is this individuals doing it? Is this the local government doing it? Is it a kind of combination of everyone? Who's actually kind of the ideal miner or the ideal market participant there?
Yeah, so definitely getting a lot of institutions and individuals interested. I think cities will also do it themselves. I think there's a world where the sort of archetype for who's mining is also kind of like a trader, because what you can do is you have a decision where when you mine, say you mine for like 100 blocks, or you're likely going to win some blocks, right? And when you win those blocks, you'll have the value at which you essentially mine those tokens for, and the value that those tokens are trading on the market. And so you're able to arbitrage on the market if you want. Like if you're mining those tokens at a 10% discount, you might decide, hey, I want to like just sell these tokens as I'm mining it and just take that 10% net profit. Some people are going to say, actually, I don't want to do this. What I want to do is I want to hold on to these. I want to stack them and earn more Bitcoin as a function. I think you're gonna get like different archetypes. You'll have like city mining institutions, individuals, traders, like individual hodlers, and then traders. And we'll see where it nets out.
Where do you go from here? So you got Miami, and kind of have been getting that up and running and talking to city officials and kind of pushing it forward. Is this let's go to 50 cities in the next year? Is it go to 2 cities? Kind of what does that rollout look like, and kind of what are the future plans?
We want to move very fast. We want to let Miami win, like succeed in the beginning, but then fast follow with many CityCoins where the community is sort of voting on which is coming next. I love to see 2 years from now 200 CityCoins in existence trading, and dozens of them at over $1 billion valuation. And maybe even some at over $10 billion valuation. But the more cities we can create, the more of a dynamic we can have between the cities. So people can choose from a menu of different cities that they want to put in their portfolio, as opposed to just being limited to a small handful or just even one. But I think it would be a mistake to just like launch 1,000 cities right now. I think that'd be like a huge diffusion of focus. And the goal here is like make Miami make Miami very successful, and then as soon as it's very clear that Miami is successful, move on to the next cities that the community decides.
I don't know if you have an opinion, but do you think Miami's going to take the wallet? Like they're going to claim the wallet?
I hope so. I think they're a pretty progressive city.
Yeah. It's fascinating to me to think about the game theory that goes into basically as the value grows inside of a wallet, do they actually take it or not? I don't know. I'd have to think through like why they wouldn't take it, right, to some degree.
I mean, imagine like thousands of people who hold Miami Coin and are on Twitter, trying to get Miami to pick up the bag, and who are also saying, no, we're gonna will this to happen, right? Like, let's get Miami Coin to over $1 billion valuation. If it gets over $1 billion valuation, what that means is that the cost to mine Miami Coin will go up commensurate with the market cap, and therefore their reserved wallet will be worth enough, or it actually becomes a fiduciary duty to pick up the bag, so to speak. And it's really important that the community kind of works together and helps make this happen. But I'm optimistic.
Yeah, it's absolutely fascinating. How can people get involved? What are the ways that somebody who's listening to this, watching this, what can they do?
First follow Mine CityCoins at Mine CityCoins on Twitter, and sign up with your email at citycoins.co. You'll get all sorts of announcements and like AMAs and like ways to vote on new cities and things like that. If you want to mine Coin when it begins mining, which looks like it's slated for July. We'll see what happens, but it looks like July. There'll be a bunch of like tutorials and stuff for how you can do that. And so there's a bunch of content being created right now. But I think in the future, there'll be like a kind of like a playbook, guidebook for, if you want to bring CityCoins to your city, here's how you do it. Here's how you talk to your elected official. And here's how you get people voting on it, sort of thing. But focus is like laser eyed on Miami for the time being.
Got it. And when you start to think about kind of the maybe social aspect of this, is it helpful for people to kind of talk about it with their local officials or talk to other people in their community, or does you really have to wait until you kind of come to their city or town first?
I think it's helpful. I think like the more the idea can spread and socialize, the better. Like this is a really good meme. It's like it's a very positive meme, and it spreads pretty easily, seemingly. Like people seem to get the concept very quickly, like way quicker than they, get the concept of like smart contracts or, decentralized computing or whatever. People understand what cities are. And so, spread this with your grandma, spread this with, spread this to everyone and get them signed up at citycoins.co for sure.
I love it. Before I let you go, ask everyone the same 3 questions, and then you'll get to ask me one. Most important book that you've ever read?
I mean, I hate to be trite, but probably The Sovereign Individual. That's pretty good. Also, like The Bias of Communication by Harold Innis is like, that's a weird one, but it's a good one.
What is that one about?
It was written by this like Canadian dude in like 1951. I like pretty much only read books that are like about the future, that predict the future well and have been validated, like prescient books. And it's essentially about different forms of communication. So you have like time bias communication, like oral tradition, or like the Great Pyramids. And then you have like space bias communication, which is like, stone tablets or like papyrus, like can move far, but maybe they don't last very long. And sort of marrying these two forms of communication can allow for essentially like prosperous civilizations to exist. And, I think of like Bitcoin as like a time and space bias method of communication and like a perfect substrate to build sort of like civilization level software, which is why it's weird to feel like contrarian. Like I feel like Bitcoin's already won its money, but I feel like it's like super undervalued as like substrate that people can like anchor into. And I'm looking forward to that, like catching on a lot more this decade. I think Bitcoin's going to evolve once more in this decade as like a kind of like a truth, like a ledger of truth over this decade. And, CityCoins is just one way of sort of anchoring into that thesis.
Got it. What about the sleep schedule? My friends over at 8 Sleep, I sleep, 5-6 hours. Now I sleep 8 or 9. I sleep on their thermoregulated bed, and I just turn it cold as hell, like as cold as it can go. But pretty much I just do that. It's been a game changer for me. What's your sleep schedule?
Nice, man. I've been falling asleep at like 9:30, 10 o'clock at night, and like waking up at 6:30. I'm on Pacific Standard Time, so I kind of wake up early. But I do turn the temperature down to 60 degrees and just like put, I do it like the Austrians do, where you're like, or the Swiss, just put on like a big heavy blanket, and I sleep really deeply that way.
It's the best way to do it. Third question, and then you get to ask me one, is aliens. Are you a believer or a non-believer?
If you're asking me about UFOs, I think that's just like new physics. You can like replace little green men with new physics. Aliens, I don't know. I think if you asked me this question a year ago, I would say definitely aliens exist. Um, I haven't really, I don't have a reason to say they don't exist, but just kind of like re-examining things. Yeah, I don't know. Like, I think in this next like 100 years, we're going to learn a lot more about the nature of reality, especially through the lens of physics. And there may be a world where believing that there's no aliens is actually, like, besides like bacteria or whatever, is not so crazy. Like, who knows? I don't know.
It's a wild, wild world we live in, my friend. What one question do you have for me to finish up?
How many brothers do you actually have?
Unlimited. It's infinite. Literally, we just spawn more and more and more.
There's one Queen Pomp that just gives birth to all the little Pomps.
That is my mother. No, there's 5 boys total. I'm the oldest, and then my 2 youngest brothers are on Twitter. So 3 of us, obviously plus my wife, and there's 2 brothers that actually have Twitter accounts, but they are pseudonymous, and they're not really interested in revealing themselves. But one day maybe I can get them to start participating in the fun.
They should stay pseudonymous. That is like definitely the go-to these days. Like, separate your working name from your real name.
Yeah, that's what they've done so far, and they just kind of hide out in the shadows, and follow along, but no one knows they're there. Nice.
And you're in Miami now, right?
I am.
How are you liking it?
I love it. I always describe to people, I'm just happier. Like, it's a simple way to just describe everything all rolled up in one, which is just literally I'm happier. So I'm not leaving.
That's amazing. Are you going to mine Miami coin?
Potentially. Let's get it live first. Right? All right. Where can we send people? You said at mine CityCoins on Twitter, and then citycoins.co.
That's right. Yeah, nailed it.
Okay. And where can people follow you on Twitter?
I'm Patrick W. Stanley. At Patrick W. Stanley. It's long, but...
Awesome, man. Well, listen, thank you so much for doing this. I think this is a super interesting concept. And if the mayor of Miami or somebody else in another city ends up kind of embracing this, I think that it could be pretty interesting seeing this idea of municipal equity versus municipal debt. So I appreciate you coming on, explaining it to us. And we'll definitely have to do it again in the future as things progress.
Yeah. Suarez, if you're listening, which I know you are, we can't wait to help you. And thanks for being a great mayor.